I have two themes for this week's presentation. The first one is what a difference a day makes. And the second theme is, wow, given all this weird stuff going on in the US with the tariffs and Trump's tariff plan, it's kind of remarkable that the S&P is only down 10%. Okay, first thing, what do I mean by what a difference one day makes? Well, I'm speaking to you right now a little after lunch on Wednesday in Singapore. If I had been recording this one day earlier on Tuesday, I would be looking at overnight markets from the US. And on Monday, the Dow was down about more than 1,000 points, and the price of gold was going parabolic, skyrocketing. But I'm not talking to you on Tuesday, I'm talking to you on Wednesday. And on Tuesday, the Dow was up 1,000 and the gold price was down modestly. And on top of that, before I sat down here, I checked my screen. Dow Jones futures are up about 500 points, meaning we're going to have another strong opening at least, and probably have a strong day on Wall Street later today, Wednesday, when regular trading starts. And gold is down about $70 an ounce. That's a big one-day move for gold. So what happened? Well, what happened was we had two relatively informal comments from Scott Bessent, Treasury Secretary, and Donald Trump, the President. Let's start with Bessent. Bessent was speaking at a private event for investors, and he said that the trade war between China and the United States was sort of unsustainable at the current level of intensity, and he expected things to de-escalate. And the market liked that, even though that's kind of a general statement. There's not a lot of facts behind it. Just saying that, the market got excited. They were happy to hear it. Then Trump spoke, and he pretty much backed up what Bessent spoke. Trump was speaking to reporters, and he said, well, you know, where the tariffs are now, which are over 100%, he expected them to go down substantially. He said specifically he didn't expect them to go to zero, but his means of explaining it, he expected them to go down closer to zero than like whatever they are now, 138%. The other thing Trump said, which the market likes hearing, is he said he was not going to fire Fed Chair Jay Powell. So going back to gold all year long has been going up as trade tensions got worse. Gold has been a great trade tension hedge year to date. But gold absolutely went parabolic last week when Trump began criticizing Jay Powell and saying he wished he wasn't Fed chair, or he was very critical. Trump's problem with Powell is he felt that Powell wasn't reacting to the slowing US economy and Powell should be cutting rates. Actually, Trump's view is probably shared by a lot of people in Wall Street. It's not particularly controversial to say that the Fed probably should be cutting rates right now. But what the market didn't like was Trump kind of interfering with the operations of the Fed. It's hard for presidents not to make comments like this, but his were considered to be too direct. People want the Fed to be as independent as it can be, so that's not good. So Trump's comments were not good for the bond market. It was not good for investor confidence. That added to the sell-off we had on Monday, but also added a lot to that parabolic move we had on gold going higher. Okay, let's go on to what I expect to see from gold going forward. I think the gold price, when it goes parabolic like that, even if you still think that the bull market is going to remain in place, corrections after that kind of move could be very vicious. So if we're right now, let's say 3 or 4% off the high, that doesn't really seem like much given the fact that it has been rising trade tensions and the fear of Powell being sacked that led to that huge upswing in the gold price. I think you could have much more substantial drops in the coming days. It could be fast and vicious. And I'm saying that even if this doesn't mean that we're going to leave the bull market we're in and it's just got to be a correction. You could have a fast and vicious correction, I guess that's what I'm saying. Now going back to the equity market, generally I'm pretty positive about equities. That's my bias. Equities go up over time. And here you have this good news and you sit there and say, I want to buy the market. But you got to remember what I said. Trump's comments, Bessent's comments, they didn't create, there wasn't a lot of meat on the bone there. They weren't talking about talks going well or they're going to conclude an agreement with China or anything like that. And yet the market reacted so strongly to it. And you have, this very poor rollout of Trump's tariff program. It was very poorly received by the market. Most of the decline in the U.S. market has occurred since April 2nd. I think I saw on Monday when the market was at its low, an article saying this has been the worst April year to date since 1932. So you really had a very bad reception to Trump's plans, and you don't really have any official statement saying the plans have been abandoned. So, it's kind of, you would kind of hope that you would be able to get the market, with the market likely to open higher. If you're buying today, you're only buying a market down 9%. So you're not going to feel like you're going to get any bargains. I also checked to see, well, what if you focus on the growth stocks, which have been hurt more? Maybe you'll feel like you got more of a bargain there. But actually, if you look at a proxy for growth stocks in the U.S., the Vanguard ETF, the VUG, the Vanguard Growth ETF, that's only down about 14% year to date. So you're not getting any super bargain there. So if you have money and you want to put it to work in the market or in the U.S. market specifically, you just sort of have to close your eyes and say, I'm not getting a great bargain, but I'm just going to buy it now because it seems like the worm is turning and we're getting some good news. Now, what could really turn a buy that you're making now into something that's really excellent? Well, it's been pretty clear that Scott Bessent didn't agree with the tariff program that got rolled out on April the 2nd. Bessent's view is that we should have low universal tariffs in the United States. What would that do? Like, for instance, to have 10% tariffs against everybody. And basically that becomes a proxy for a consumption tax in the US. Most economists say you need to tax a little bit of consumption so you don't have to tax so much income, and that causes investment. So anyhow, if we start going into the Bessent world where Trump starts agreeing with Bessent that maybe there's universal 10% tariffs, well, that'll be something that can pay for the extension of the Trump personal income taxes cuts that are due to expire. That would be, the bond market would be happy, because if that tax cut that Trump wants to make and the Republicans want to make are not paid for by another source of income, the bond market would probably react to that badly, and that wouldn't be good for equity markets. So if it's paid for with tariffs, although that's not so good if you're an American shopper and you're buying back to school clothes for your kids, rich people who are saving money on their income tax, they're not going to spend a lot more extra money because they got a tax cut. They're going to put that money into the market, invest it, and that's good for Wall Street.